Hello, friends, and welcome back to our community. I need you to stop whatever you're doing right now. If you're distracted, put everything else aside for just 20 minutes. Tell your family you need some quiet time, turn your phone to airplane mode, and pay close attention. Because if you miss what I am about to share with you, you might regret it for the rest of your life. We are staring at a financial event so massive that the biggest banks in America are facing a potential $390 billion loss. You heard me right. If the price of silver hits just $100, these institutions are looking at total bankruptcy. They are panicked, they are scrambling, and they are terrified because the math simply does not add up for them anymore. This is not just a market correction. This is a survival crisis for the global banking system. Ladies and gentlemen, something historic has just happened. Ideally, this should be front page news, but of course, nobody's talking about it. For the first time since the mid-1990s, central banks around the world now hold more gold in their reserves than United States Treasury debt. And let me repeat that so it sinks in. Central banks now hold more gold than United States dollars, more gold than United States bonds, and more gold than American debt. This is a crossing of the Rubicon. This is the definitive moment when the global reserve currency, the United States dollar, officially lost its monopoly. It is the moment the world looked at us and said, "We do not trust you anymore." If you do not understand the implications of this shift, you are about to get a very expensive education. So please, listen closely as I explain exactly what happened and why. It means silver is about to explode to levels most people think are impossible. We have to start with the gold story because it is the foundation of everything else. For the last 50 years, ever since the Bretton Woods system collapsed in 1971, the United States dollar has been the global reserve currency. Every country on earth holds dollars or treasury bonds. They need dollars to buy oil and to conduct international trade. That is just how the system has worked. But there is a massive problem. The government keeps printing more dollars. The debt keeps skyrocketing, the deficit gets bigger, and the value of each dollar in your pocket keeps dropping. For years, foreign countries have been nervous. They have watched our government spend money recklessly. They have watched the Federal Reserve print trillions of dollars to bail out banks. They have watched our national debt climb from 10 trillion to 20 trillion to 30 trillion, and now to over $36 trillion. They are asking themselves, how long can this go on? And what happens when the music stops? So quietly and slowly over the last few years, they have been diversifying. China, Russia, India, Saudi Arabia, Turkey, and Poland, they have all been buying gold. And now, for the first time in 30 years, the total gold held in central bank reserves exceeds the total United States Treasury debt they hold. This is a seismic shift. It is a massive vote of no confidence in the dollar. It is the world saying, we do not trust your paper money anymore. We want something real. I want to ask you a serious question right now, and I want you to be honest in the comments below. Who do you trust more with your life savings today? Do you trust the Federal Reserve and the United States dollar, or do you trust physical gold? Type Fed or gold in the comments. Let's see where this community actually stands. Gold cannot be printed. It cannot be inflated away. It is neutral. It is not controlled by any government and is not subject to sanctions. That is exactly why it is so attractive right now. The government has weaponized the dollar, freezing reserves of other nations during conflicts. The rest of the world sees this and is terrified. They are thinking, if they can freeze those assets, they can freeze ours too. So they are selling treasuries and buying gold. This is the beginning of the end of dollar dominance. Now, you might be wondering, what does this have to do with silver? The answer is everything. If central banks are fleeing the dollar for gold, private investors, corporations, and wealthy individuals will follow. They are going to buy gold, and they are going to buy silver, because silver is the little brother of gold. It is the asset that moves 10 times faster than gold when the monetary system is in crisis. And make no mistake, we are in a monetary crisis right now. This brings us to the shocking events of yesterday, Thursday, January 15th. Silver hit $92 per ounce. That is up from $30 just 6 months ago, a 200% move. That is the kind of move that creates immense wealth. But then, while Western markets were closed, the price crashed from $92 down to $87 in a matter of hours. A $5 drop in the overnight market. When people woke up and checked their accounts, they saw red and panicked. They thought the rally was over. But that crash was not a correction. It was a survival move by the banks. The big commercial banks are short silver. They have sold paper contracts for metal they do not have. According to the latest data, these banks are short approximately 4,400,000,000 ounces of silver. At $90 per ounce, that short position is worth $396 billion. That is more than the entire market value of some of the world's largest banks. If silver stays at $90 or goes to $100, they are insolvent. They are bankrupt. Let me pause here because this makes my blood boil, and I bet it makes yours boil too. If these banks go bankrupt because of their own reckless gambling in the silver market, do you think they deserve another taxpayer bailout? Type "no bailouts" in the comments if you agree that we should not pay for their mistakes again. So, what did the banks do when faced with this existential threat? They did exactly what you would expect a desperate entity to do. They panicked. They dumped massive amounts of paper contracts into the illiquid Asian and European trading sessions to smash the price down. They triggered stop losses on purpose. They forced margin calls on leverage traders. They created fear and panic to buy themselves a little bit more time. But here's the key thing you must understand. They did not fix the problem. They just delayed the inevitable because the fundamentals remain exactly the same. The physical shortage is still real, industrial demand is exploding, and the vaults are empty. When the price breaks through $95 and heads toward $100, the banks will be in even deeper trouble because they just showed their hand. They proved they are desperate. Let me show you the proof that the physical shortage is real. While the paper price dropped from $92 to $87, something very interesting happened in the physical market. The lease rates went vertical. For those who do not know, when someone wants to borrow physical silver for industrial use or to cover a short position, they have to pay a fee called a lease rate. In a normal market, this rate is very low, maybe 0.5% or 1% per year, because usually there is plenty of metal to borrow. But right now, lease rates are spiking to 5%, 10%, even 15%. Some reports show rates as high as 20% in certain markets. Why? Because there is no metal available. The vaults are dry. People are willing to pay 20% just to get their hands on silver for a few months. This is called backwardation, and it is a massive red flag, screaming that there is a shortage. This proves that the drop in the paper price is a lie. While the banks were crashing the paper price to make it look like the rally was over, the physical market was screaming that they desperately needed metal. Now, look at what happened in Shanghai. Yesterday, the Shanghai Futures Exchange announced they are slashing the maximum position size for silver contracts from 7,000 lots down to 3,000 lots. That is a 57% reduction. Why would an exchange suddenly cut position limits in half? Because they are running out of physical metal to deliver. They are terrified they cannot fulfill their obligations, so they are forcing traders to reduce their bets. This is a soft force majeure. It is the exchange admitting they cannot handle the volume. Since Shanghai is the largest physical silver exchange where the real price is set, this confirms the global market is running on fumes. I also want to address the elephant in the room regarding rumors about Rick Rule. Yesterday, people were panicking, saying one of the most respected investors in precious metals sold all his silver. Let me give you the truth. Rick Rule did not sell all his silver. He sold 80% of his physical position to take profits. He recovered his initial investment and taxes. And now he is riding the remaining 20% on house money. More importantly, he used that money to buy more silver mining stocks. He is moving into higher leverage plays because he believes if silver goes to $150, miners could go up 300 or 500%. He is not bearish. He is simply managing risk like a smart investor. Now, let me tell you about the most insane forecast I have heard in a long time. VanEck, a major asset management firm, just released an updated forecast using the Jim Sinclair model. This model calculates the fair value of gold by dividing the total money supply by the amount of gold held in reserves. In 2007, this model predicted gold would rise significantly, and it did. Now, in 2026, with the money supply in the United States over $21 trillion, the model is forecasting gold at $184,000 per ounce. Let me say that again, $184,000. I'm not saying gold will hit that number next month, but the math is there. If the dollar loses its reserve status and central banks have to back their currencies with gold, that number is actually conservative. And if gold goes to $184,000, where does silver go? Historically, at a 15-to-1 ratio, silver would be over $12,000 per ounce. Even at a conservative 60-to-1 ratio, silver would be $3,000 per ounce. So when I say silver is going to $300 or $500, I'm being extremely conservative. Let's bring this all together so you can see the big picture. Central banks are fleeing the dollar. Banks are short over 4 billion ounces of silver and facing huge losses. Shanghai is cutting position limits because they are out of metal. Lease rates are spiking. All these data points tell you the same thing. The system is breaking. Hard assets like gold and silver are the only safe haven. So, what should you do? If you own physical silver, hold it. Do not sell just because the price dipped to $87. Do not sell because of rumors or because some talking head on television says the rally is over. You hold because the fundamentals are screaming that the end game is here. The price is going to levels most people cannot imagine. If you own paper silver, you need to be very careful. When the system breaks, you might get settled in cash at $87, while the real physical metal trades at $200. If you do not own any silver, you need to buy now. Not next week, not when the price dips again. The window is closing. Dealers are running out of inventory, mints are backed up, and premiums are exploding. If you wait, you might not be able to get any metal at any price. The dip to $87 was not driven by market fundamentals. It was driven by manipulation to save the banks from bankruptcy. But they did not solve the underlying problem. The physical shortage is still there. The price will recover, and when it does, it is going to blow through $92 and head straight for $100. At $100, the bank's losses become unmanageable. They will need a bailout, and the system will break. People always ask me about the timeline. When will silver hit $100? I do not know the exact date, but we are very, very close. The signs are everywhere. My guess is we have weeks, maybe a few months, but certainly not years. The pressure is too high. If you are waiting for the perfect time to buy, the perfect time is now. By the time it is obvious to everyone else, it will be too late. The metal will be gone, and the price will be $200. One final thought. The reason the banks are so desperate is that they know what is coming. They know the physical market is going to overwhelm the paper market. When your opponent is terrified and making desperate moves, that is not the time to fold. That is the time to press your advantage. Look them in the eye and say, I am not selling. Do not let them shake you out with a $5 dip. Trust the fundamentals. However, there is an even darker chapter to this story that we absolutely must discuss before I let you go. It is not just about the banks going bankrupt. It is about the specific mechanism they will use to try and save themselves, and how the mechanism puts every single dollar you have in the bank at immediate risk. You see, most people believe that if their bank fails, the government will simply write a check and bail them out, just like they did in 2008. But the rules have changed. The game is rigged differently now. Under the Dodd-Frank Act and similar laws passed in Europe and Canada, the new protocol is not a bailout, it is a bail-in. This means that instead of using taxpayer money to save a failing bank, the bank is legally authorized to use the money of its own depositors and unsecured creditors to recapitalize itself. When you deposit money into a bank, you probably think that money still belongs to you. But legally, you are an unsecured creditor to that bank. You have loaned them your money, and if they go insolvent, you are last in line to get paid. If silver hits $100 and these massive short positions blow up the bank's balance sheets, they are not just going to close their doors. They are going to freeze your accounts. They are going to convert your savings into worthless bank equity to fill the black hole in their ledgers. This is not a conspiracy theory. It is written into the banking laws right now. They call it stabilizing the financial system, but what it really means is confiscating your wealth to pay for their gambling losses. I'm curious, did you know about these bail-in laws before watching this video? Or is this the first time you're hearing that your deposits could be seized? Let me know in the comments, because this is something the mainstream media refuses to cover. And do not think for a second that the FDIC is going to save everyone. The FDIC insurance fund has enough money to cover only a tiny fraction of total insured deposits, pennies on the dollar. If one or two small banks fail, the system works. But if we see a systemic collapse caused by a $390 billion loss in the derivatives market, the insurance fund will be wiped out in an hour. This is why owning physical silver is not just an investment strategy. It is a defensive shield. Physical silver in your possession has no counterparty risk. It is not a liability on someone else's balance sheet. It cannot be bailed in, it cannot be frozen, and it cannot be hacked. It is the only asset that is truly yours. Furthermore, we need to talk about what comes after the collapse. The government knows the banking system is fragile. They know the dollar is losing its dominance. Their solution is not to return to sound money like gold or silver. Their solution is total control through Central Bank Digital Currencies, or CBDCs. They want to move us into a fully digital system where every transaction is tracked, monitored, and approved by the state. If the current banking system implodes, they will present the digital dollar as the savior. They will say it is safe, instant, and secure. But it is a trap. A programmable currency allows them to dictate where, when, and how you spend your money. They could put expiration dates on your funds to force you to spend. They could turn off your ability to buy certain goods if they do not like your carbon footprint or your political views. This is the line in the sand, folks. When they try to force this digital dollar on us, will you comply? I want to see a wall of "I will not comply" in the comments section today if you stand for financial freedom. This is the ultimate reason why they hate gold and silver. Precious metals represent financial privacy and personal liberty. They are the antidote to the surveillance state. By holding silver, you're not just betting on a price increase, you are voting for freedom. You are opting out of a rigged digital system that is designed to strip you of your autonomy. This is why the price is being suppressed. They need you to lose faith in real money so you will accept their digital counterfeit. But the sheer demand for physical metal shows that people are waking up. The dam is breaking. The lease rates, the Shanghai limits, the central bank buying, it is all evidence that the market is rejecting the paper illusions and demanding reality. So when I tell you to hold your silver, understand the gravity of your position. You are holding the keys to your own financial sovereignty. We are witnessing the end of a 50-year experiment in fiat currency, and the transition will be chaotic. The banks will try every trick in the book to separate you from your metal. They will crash the price, they will spread rumors, and they will likely threaten to confiscate or regulate sales. But you must stand firm. The history of money is on your side. For 5,000 years, gold and silver have survived every empire, every war, and every currency collapse. They will survive this too. The greatest transfer of wealth in history is underway, and by holding silver, you are positioning yourself on the winning side of history. The central banks buying gold proves it, the Shanghai limits prove it, the spiking lease rates prove it, the $396 billion loss the banks are facing proves it. The end game is here. Hold the line, do not panic, and get ready for the ride of your life. Thank you for being part of this community. Remember to stay informed, protect your wealth, and never surrender your freedom. We will talk again soon.